Mr. K.V.Kamath, thank you so much for giving us this very special interview on ET Now. I just want to start with the last year, which has been pretty tough for Infosys in terms of underperforming its peers. But at least 2013, we seem to have started on a positive note. The third quarter results has raised a lot of hopes. So are these the first signs of a turnaround? Can we look at it that way?
Yeah, as I always do, this is a question that has to be answered by executive management. But having said that, I think that the team needs to be complimented on what they have achieved during the last quarter. I think it is something we can all applaud them for. Underlying this, I think, is what I see as green shoots in certain domains. Very early days, but green shoots certainly are there. Because we are seeing that the number of wins that Infosys has had in Europe is very heartening, because otherwise Europe looks a difficult market. So I will say only this, that we hope that this turnaround in the IT business continues into the next year across the globe for all IT companies.
Now, if an Infy shareholder watching this interview wants to know from the chairman, if 2013 is going to be the year when the company bounces back and regains its pride of place, what would you say to them?
Without making any forward-looking statements, I would clearly say that indeed that's what the board's endeavor has been. It's been a lot of hard work during the last year through very trying times to get the strategy right, realigned as necessary, practices to be best practices in areas where the industry is heading, and get teams aligned to do what they need to do in this context. And I think the teams have done it, and as I said, they need to be applauded. And this is what I can share with the shareholders, that we will drive the teams to deliver value going ahead.
Right. I remember when you took charge nearly 2 years back, you told me that your leadership style is light touch, and that's what is going to be at Infy. Does that hold good even today?
Wasn't it light touch during the last year? I think basically the style is what I call a style where you engage people, you engage through the leadership level as necessary. And Infy has been a very open company. There is any director can talk to anybody in the organization, not just the chairman being able to talk to anybody in the organization. So there is communication. And then understand the challenges and make sure that those challenges get addressed as you go forward. To me, that's light touch. I would say running of the company, decision making about the company, and making sure things are set to a pattern is executive responsibility.
And will that strategy sort of continue, the light touch?
There will be no change to my strategy. So that's why I'm saying on all executive matters, the executive team will speak to the channels.
Right. Just want to understand one thing. A lot of people found it a bit baffling that Infy sort of retained its focus on premium pricing in a market where peers were just going after growth, because the market itself was like that. In hindsight, is that a call that you got right, or is it too early to say anything about it?
Yeah, in a way, I would look at it this way. Sometimes it's good to look back and tell some of the analysts, some of the media friends, look, numbers can be different from what you thought they were, whether it's growth or whether it's margin. Indeed, I think the team worked very hard to get this strategy right. As I said, in the industry, for the industry, I see green shoots where there weren't any earlier. And that should help if you position your product properly and your offering properly to get margins right as they were. Whether margins will remain exactly what they were in the past, difficult to say.
Okay. You have a reputation for a man who's hungry for results. So based on the recent performance, has your confidence sort of gone up in the company and the management?
See, confidence does not necessarily go up by one quarter's results. I think confidence goes up by effort put in over a period of time. And this effort was being put in over quite a long time in the last 3-4 quarters, I would say. And it has, some visible fruit is being seen now. So we need to see that, ensure that it continues into the future. And that will be the endeavor of the board.
Moving away from Infi to the broader industry picture, I remember you told me in a previous interview that the more difficult it gets for developed economies, the better it is for an industry such as IT, because the focus then veers towards driving up efficiencies, cutting down costs. Is that a trend that you see strengthening this year?
Indeed, I think that's happening, and one industry where not only these challenges but a larger industry challenge is driving companies to or institutions to look at IT solutions is the banking business. So globally, banking should be an attractive place for technology companies. And indeed, in other countries, as technological evolution happens and as customer expectations change and the economy is in deeper problems, I think are three levels of opportunity that present themselves altogether.
Right.
So I would guess that the next few years this will play out. Not necessarily in the coming quarter or the coming year, but I would say next 3-4 years. See, my belief is that we are at an inflection point again in technology, where more and more people, unheard of number of people, are able to access information through the net. Absolutely. Using a handheld device. And to me, this is a revolution that's happening. And technology companies and their clients both have to respond to this. And that creates opportunity. Right.
You're considered one of the most prolific CEO gurus of India Inc., so to speak, because of the number of people you identified and mentored at ICICI Bank. Is that a hat that you wear here as well?
That's a hat that any board, if you are a CEO or if you are a chair of a board or a nomination committee of a board or indeed a board member, that ought to be your priority. Because there are certain domains where they say that the only purpose of a board is to make sure that, number one purpose is to make sure that succession happens in an orderly manner in any company. And then, of course, set targets, measure, and all the governance processes. But this is put as the first, I would say, level of delivery that is expected from the board. It's not so in India, but you always wear that hat. And that hat doesn't necessarily mean that you look at a successor as he reaches up to the board level. You look at talent right from grassroots level and then make sure that you have the processes, the internal processes to make sure that that talent can rise. And that is what I think has been the focus and will be the focus in Infosys going forward, to make sure that this large mass of young Infosians are taken through, I would say, the growth momentum as Infi grows in the future.
So has the scope now zeroed in on perhaps the next CEO? Because August 2014 is when Mr. Shibulal's term ends. So would it be right to presume that there will be a candidate in place by August 2013 who could even sort of have an interim COO role? I'm just...
I'm going to copy Mr. Murthy on this and say that what he said earlier on, that the nomination committee will be fully charged with this at the appropriate time, and I'm sure they will come out with the right at the right time. So indeed, I think we will not let any dates lapse, but that's the nomination committee's job.
Just going to try my luck on this. Names that I keep hearing constantly: B.G. Srinivas, Ashok Vemuri, V. Balakrishnan. Are these the names that you hear as well from the nomination?
I will not comment on any name, but I will say that Infosys has outstanding leaders. And that's what will be part of the nomination committee slate.
Considering the deep leadership bench that you have 3 people on the board, then you have a very power-packed executive council. Would it be okay to assume that obviously the first preference would go to an internal candidate before you look for someone else?
Let's leave it to the nomination committee, because I don't think anyone has given thought to that as yet.
I just want to get a sense of the broader economy. Are we at a much better place today compared to, say, 5 months back? The government has announced a slew of reforms. You have a much proactive and energetic government. So are we at a better place today?
Clearly, yes. Clearly, yes, in the context that, see, for an economy to perform, you need a government which is ready and able to act. We clearly have a government which is ready and able to act on several fronts, and has indeed acted on several fronts. So that's the first point that I will make. The second is, I do not think, other than the infrastructure sector, the slowdown is as deep as people believe it is. We are still growing, but we may not be growing at the what we would have aspired for or desired. Rural India is still growing at a good nick. I have completed one of my 6 monthly drives across say 1,000 miles of India. And what I see heartens me. There is more activity in rural India than in urban India. And urban India has not exactly fallen off the cliff. So our towns and cities are bustling and things are happening. Manufacturing will have clearly a good time. Fast-moving consumer items will have a good time. Services sector is just below 10% growth, so they are in good nick. So it's only the infrastructure sector, and my assessment is our lack of ability to come to a conclusion on issues which are hurting the infrastructure sector is resulting in maybe a 1.5 to 2% growth impairment, because the act of investing in infrastructure drives growth. So you've got the act of investing which drives growth, and then post-investment, that investment bears fruit. So we are losing both, and there is urgent need to attend to that. And this is particularly true in large infrastructure projects. Power, because of various associated issues, mineral issues or environmental and associated issues, roads, acquisition of land and other related issues, ports and so on. They are large projects needed for the country. The act of investment in them itself provides a growth momentum, and we need to get our resolution right on this so that we proceed.
I want to talk specifically on the reform with respect to banking, the banking amendments bill. Now, do you think this could be a game changer for the sector, or is there a risk that it could lead to a regulatory overdrive? Because, the RBI would want to step up action against possible flouting of norms by new entrants. So do you think that's a big risk?
See, as far as new entrants are concerned, we'll keep that aside. I want to acknowledge that our regulator is probably the farthest ahead on the curve in terms of what banking regulators have done anywhere in the world. So much so, and I can say this with great pride, that our regulator has not had to take action when overall global regulators are still debating what action to take. Our regulator has not had to take action because action was taken virtually well before the crisis on all issues, whether it is the most vexatious issue in the West, compensation. Action was taken long back. The issue of capital, action was taken long back. Tightening was done long back. On various prudential things that you do on both sides of your financial accounts, the balance sheet side, on the assets and the liability side, and on the P&L side, treatment of assets, treatment of income, recognition of income, all these were dealt with before the crisis. So we have had the luxury in a way of having had a regulator who has had the foresight to think through this. Now, in hindsight, we can say that this was something, enormously useful to this nation, because that enabled us to withstand this crisis without too much shock. So that I don't see any change happening there because of the banking regulator. Because whatever tightening was done, and well, if you have a few more, I would say, abilities consequent to a new act, of course, those will be factored in. As far as new banks are concerned, we will wait to see what is the view finally in terms of who, how many, and what. And then look at it. My own view on new bank entry is, I would welcome entry. I would also say that banking is a long-run business. And it's going to be between 7 to 10 years before any impact of the new banks will be seen in the economy. But we can't look at these as short-term things. The nation has to be looked at on a long-run basis. So I welcome entry, and they will have to build their business as other banks have built them.
Do you think large industrial houses with NBFCs should get a license?
See, I think the pros and cons of who should get and who should not have been debated. Yeah. I think as long as the regulator is comfortable that what I would call risks in terms of group approach can be curtailed, can be properly understood, analyzed and curtailed, I think they will take a decision based on their comfort on this. So I would leave it entirely to them to take the call.
Right. Going back to the reforms part, it's definitely boosted sentiment in a big way. But fundamental problems such as fiscal deficit, current account deficit, low GDP growth, they still remain. So how long before all this actually starts reflecting on the growth rate?
The fiscal deficit is an interesting issue. I think the deficit is where it is because the government recognized that certain things have to be done to people, who have no other support. And I think all of us should clearly endorse it. And it has had its own positive impact because it has then, we may say that it has ended up in inflation. I would say that it has ended up in a whole new drive for those sections of society who were deprived. The wage resetting cycle has started as a consequence of several of the actions of the government. We will see and we will recognize the benefit of it after 5 years or 7 years when economists and historians note what was the consequence of this. So to me, that is one major contributor to the deficit. The government is rightly concentrating on how can we improve collections in terms of the revenue items. And I think that's where we need to be innovative. There are a whole lot of things which we can actually monetize. Government is on the path to monetize those. Government corporations can monetize a whole lot of things. Dividending to government can increase. So the government has got a whole lot of tools apart from just tax to get its revenue equation right. And if you get that equation somewhat right, you will suddenly see that the 5.3 target is achievable.
So you are confident that the government can?
Indeed I am. And knowing what our finance minister has done earlier, we may see that number actually come down. It could be a pleasant surprise if all these things he's able to execute, what he probably has in his mind. So I'm not at all pessimistic on the fiscal deficit number because we have somebody there who knows how to manage this number. The current account deficit is a little more bothersome at this point in time because we have the challenge of a rupee which is not very strong. It's putting enormous strain on the import bill as a consequence. Oil which is not coming off to the extent that it has, and exports which are sluggish. So we have had a challenge on this front. So we will need to carefully navigate through these things. Though the government has clearly identified that there are certain items on the outflow side which are probably triggering the issue. And one is indeed gold imports.
Right.
Now, government will figure out how to solve this. I'm not going to, and I don't have any solutions for this. But once you have identified the problem, finding a solution is easier. And I think the government has clearly understood what the problems are, and I expect them to act on this.
Rating agencies still hold a 1 out of 3 chance of a downgrade. Do you think their concerns are exaggerated?
I think that's very unfair of the rating agencies to take that position. Of course, they are their own masters, so we cannot influence what they say. But it would be very unfair, and I will reiterate this, that if dispassionate exercise is done globally, or various countries on parameters that are very transparent, then I don't think any rating agency ought to say what they're saying.
One more prickly issue has been the fact that the RBI has not really marched in step with the government when it comes to cutting interest rates in response to policy action. Do you think there could be a reversal in that stance this year? I think Deepak Parekh recently said he expects interest rates to drop by 100 to 150 basis points this year. So your view and, what would your projections be?
See, I also would expect interest rates to drop this year. Having said that, the timing is a little difficult to predict because RBI's core function to control inflation, the belief that interest rates are the key to this, plays out in terms of when and what the timing would be. It's a very difficult challenge because we need to ensure that growth doesn't come down to a level where triggering growth to a higher level becomes a very long delayed point. At the same time, you drop interest rates to a level where inflation becomes uncontrollable in a country of 1.2 billion is also not something which is palatable. So I think this is a job which I do not envy anyone at all of balancing these two. But balancing will have to be done because I think in terms of growth for a country of 1.2 billion, also we have come down to a level where we cannot afford to go down. So the equation will have to be resolved very soon in the coming month onwards. And I think it will entirely be done on the basis of where we are in terms of our call on inflation. Having said that, if you see the action of the Reserve Bank, they have taken other liquidity easing measures, and there is in the Indian context enormous ability to push other levers, as it were, And I'm sure they will use a mix of levers to make sure that liquidity is not strained, interest rates are fairly affordable, and the tendency to move down, and the timing of that move down is well calibrated during the year. I would agree that probably we will see a 1%, 1.5% decline in the coming years. And that will be a huge boost, for example, to all consumer items, particularly housing. Because the impact of the rate increases over the last 2 years or so has meant that depending on your age bracket, your EMI has gone up by maybe 30 to 40% to maybe 100%. So that has impacted the affordability in the hands of the lay person to purchase whatever he needs to purchase, whether it is a home, a car, or a motorcycle, or things to put in the car, and so on. And that coupled with inflation is cutting his basket, I would say, very fine as it is.
But do you agree with the criticism that RBI may have done more harm than good because of its obsession with taming inflation?
I would think it's a very tough call. I put both parts of the equation on the table. Because if inflation gets uncontrolled, then you are talking of 1.2 billion people who will go through a very difficult time. But having said that, I think now the imperative of growth has risen to the same level of importance. So as a regulator, they'll have to take a call, or as a monetary policy authority, they'll have to take a call on this, I think, in the short term.
I know this is a little too early, but do you have already have a wish list for the union budget? There's a lot of hope riding on this because people expect P. Chidambaram to undo a lot of damage done in the previous budget. So do you have a wish list?
See, I'm sure he will do what is right. And I must honestly say this, that the 16 years or so that I have looked at the budgeting exercise, I never put an a priori wish list. And in most of the years we have had leaders who have come out with budgets which have far surpassed any wish list that I could have.
Right.
And almost every time that our this finance minister has had a budget, I think he has exceeded any wish list that I would have. So I'm sure he will craft it in a way which is very equitable, and that's, I think, what is required. So what is required is that the budget provides an impetus to growth. What is required is that the budget increases the revenue map without actually hurting any section of society, because increasing rates where it hurts, it's an endless debate. But that the collection has to increase is an absolute is a no-brainer. So we have to increase collections. How it is increased is how you craft the budget. So I'm sure he will craft a budget which drives growth, at the same time keep rates stable, interest rates stable, at the same time salutary on inflation, and widens and increases the revenues of the state. I think that would be what I would expect from him, because every time he has delivered on it.
And also perhaps doing away with measures such as retrospective.
Yeah, that I take as a given. That I think has, in any case, I think he has had enough people, very, I would say, seasoned, very well informed people who have looked at it and given recommendations. I'm sure he'll act on that.
Right. Finally, Mr. Kamath, we're 2 weeks into the new year, but I hope it's not too late to ask you any resolutions that you've made for this year and anything that you can share.
I don't think that I've made any resolutions, throughout my career. But now, in the last few years, since I've stepped down from executive positions, I have made a resolution, which is not a newer resolution, but a resolution to myself and my family, that I, endeavor to take a total of maybe 6 weeks off with my family, when I am off all business, including media, including anything from the office, including, to the extent possible, telephone calls and mail. Not at one go, but in tranches. I hope I'm able to continue that for this year and for years to come.
It's been such a pleasure talking to you. Thank you so much again for this very special interview.
Thank you.